know, guys. Looking at the headlines this morning, you'd think we'd be down 1 or 2%, and we're up pretty meaningfully. What do you make of that, Charlie?
It's funny. I got a call from somebody who's a good, trader type, and he said that Trump's comments about hitting Iran hard were all to set up for a peace deal later this week. So there's
Yeah.
still that attitude that the peace deal is right around the corner, and that oil
Yes.
is going back down to whatever 70 or 80. I don't know. So it's
Do
just
you
amazing.
buy that, Charlie? Do you
I do
think
not.
that's?
I do not.
I mean,
I think,
inflation, once it gets sticky, it stays sticky for quite a while. I mean, do you think
yeah.
prices are coming down that fast?
No, I think they're going up. But I think what's really motivating the market makers right now is trying to keep the markets stable enough to get these IPOs done. And so that this could last through September. When you get OpenAI and Anthropic. But there is a real desire to get these deals done.
I
And
read a
that's
headline
what
about the IRGC targeting Elon's launch stations and over the.
Yeah. Look, I've given up trying to trade the Trump Iran war thing. It's like the traders are like the kid who gets horse manure for Christmas. There must be a horse here somewhere.
right.
Right.
And in the meantime, the earnings are pretty solid. I just finished a 2-day bank conference, and the themes were a resilient consumer, a resilient economy. So the backdrop is still viewed favorably. The guidance for earnings for the banks, most of these banks are going to have in the second quarter earnings up 15 to 25%. There are a few, like Goldman Sachs, Morgan Stanley, Citigroup, that'll be 35, 40% increases year over year. So the earnings momentum is very solid. Revenues will be up 10 to 12%, overall, and that will be a function of maybe 8 or 9% top line revenues, which we call net interest income, and then very robust fee income led by capital markets. And so if you look at the capital markets, trading is going to be up low to mid teens. Investment banking will be up 15 to 20% plus. Wealth management will be up low, double digits. So, anything related to markets is going to be very robust this quarter. Credit quality, everybody in the banking system is saying credit quality is still fairly stable. I will say, I honestly and strongly believe that the credit cycle has started, and we're going to see that more visibly in the second half of the year. Now, where it's more significant is in the private equity, private credit names. The banking industry, I think, is going to be hit, but not hit as hard. And I think it's the
And you mean
second
the
half.
deterioration of credit quality? Is that what
Exactly.
you're thinking
And
is
you're
going
going
to
to see
start
it
rolling?
and you're going to see it more visibly on the corporate side in the second half of the year. I mean, you are seeing it in the subprime side. I don't know if you heard yesterday, but America Car Mart is looking for rescue financing, working with Houlihan Lokey to try and stave off bankruptcy. They're a subprime car lender. Their delinquencies have been going up. By the time you hit bankruptcy, it's a lagging indicator. So the subprime clearly is, and that's not new, but is clearly suffering. I think the middle market is consumer is what's being stressed right now, and the only way the upper end will pare back their consumer spending is if we have any kind of market correction of substance. But for the second quarter, credit quality is going to be fairly benign.
Are you seeing any
Upper,
cracks in the consumer side, Charlie?
not in my banks, but they tend to deal with the upper end. So
Yeah.
you're seeing slight increases in card charge-offs, but nothing to get
Nothing.
nervous about.
Okay.
The card side, the auto side, maybe you're seeing a little more, deterioration. But banks have pulled back in some of these areas, particularly in the subprime area. So their vintages, from 22 to 23 were hurting them, but that's now matured. And so you're now in the vintages of 24, 25, which have gotten better because of stricter underwriting. So, basically, there's not a lot to worry about on what's going to be reported in the second quarter. But some of the leading indicators I look at suggest the second half will start to show some corporate credit deterioration. And then on the expense side, positive operating leverage, 200 basis points to 400 basis points of positive operating leverage. So, and then finally, you're going to have share buybacks, where it's anywhere from 3 to 5% of your shares are being bought back. So that brings your total EPS up fairly nicely. If I was to make a statement about what I do with the stocks, and I've been more cautious on these bank stocks, it is that PPNR, what we call pre-tax, pre-provision net revenues, is going to peak this quarter on a year-over-year basis, around 16, 17% increase year-over-year. That's a very robust number. Typically, if you go back and look at correlations, bank stocks peak with PPNR, the rate of growth. And PPNR going into 27 is going to be around a mid-single digit growth rate. So I think bank stocks are peaking here in the second quarter. They had they've held up really well in this market correction. But that's because that going into the market correction, they were trading at 50% of the market multiple. So when the market sold off last Friday and earlier this week, bank stocks held up really well. So now the relative multiple has gotten back to 56, 57% of the market multiple. They tend not to trade more than 60% of the market multiple. So I think bank stocks sort of run into a relative headwind. If the market goes back up to new highs, bank stocks are going to participate, but I don't think they outperform from here.
And your favorites, Charlie, are Citi and
yeah, Citi I still like. M&T is a high quality, balance sheet, low growth name, but very steady. You can sleep with that one. That's a Warren Buffett type of name. If you really believe, this economy is going to continue to run hot, Citizens Financial CFG is a play on that. And then one where, there's a multiple upgrade and turnaround story. Actually, it's already playing out is US Bancorp, USB. I've favored that one as well. So those are the four names that I've been favoring. I've been telling people to sell Goldman Sachs and Morgan Stanley and JP Morgan. And honestly, it's been the wrong call. So,
yeah.
But people just want to
wrong.
own it's in the momentum.
Yep. That's right.
So,
all
but,
right.
we can come back to this, but as I said, I've been cautious and almost really bearish since March, and I haven't made a lot of money since March. But there are a few areas that are working. We'll come back to that after Robert.